guys, welcome back to another episode. This week we're going to be taking a look at how you can make yourself some cash with Bitcoin, preferably how you can turn about $3,200 into over $87,000, all with Bitcoin, only Bitcoin, and just where we are in the sort of market cycle for Bitcoin. Is it going to go any lower, or is this the bottom? So without any further ado, let's take a look at some charts and we'll go through just where we are right now. So before we actually jump into this chart right here, one of the key things that we're looking for when Bitcoin goes down in a down cycle is when the miners start shutting down, the Bitcoin miners. And throughout last year, this is the kind of news stories that you saw. So this is fortune.com. It says that Hashflash shuts down Bitcoin mining service and cancels all Bitcoin mining contracts. This was the first, this was back in July of last year. However, by November, as you can see here, we started to see Bitcoin miners are shutting down their operations after the price crash. So the price had gone down quite considerably by November. I don't know who this is by. This is Crypto News Review. You see a similar story here. We have 600,000 Bitcoin miners shut down in the last 2 weeks. That was back in November. EWN, the Ethereum World News, they report that Bitcoin hash rate declines in to August levels as some Bitcoin miners consider shutting down. And then we have the Independent. This is a newspaper here in the UK. Bitcoin price crash causes bankruptcy and mass cryptocurrency mine closures. So here, all throughout the news, towards the end of last year, we saw this. Bloomberg, battered Bitcoin miners may start shutting down. That's a report from Bloomberg here. Here we have a report in December, just last year, from CoinSpeaker, where it says more than 100,000 Bitcoin miners shut down amid bearish Bitcoin market trends. So 100,000. And then we have this news here. This came out in February, so very recent news. It says Abkhazi, whatever that is, temporarily shuts down 15 mining farms. And that was in February. And here we have another report. Oh, this was from December last year. 100,000 Bitcoin miners shut down yet again. So as we see here, clearly we're in a time towards the end of last year, early this year, we are seeing considerable amounts of Bitcoin miners shutting down, which gives us a clear idea that we are definitely at the bottom of the Bitcoin market, which is good news. And for me, it doesn't even come as a surprise. Here's a little clip of what I said around June, July time last year. And right now, guys, we have this classic, if we just zoom in a little bit, this is a classic descending triangle formation which has come about. A descending wedge triangle is a bearish formation. In fact, it's about 60 to 70% likely to go down, and if we lost 50% again, we should be around the sort of 3,000 mark. If we look back to see if there's any support there around 3,000, you can see all these peaks here, which are around the sort of 3,000, 3,100, 3,200, somewhere around this zone here. 3 other people which saw exactly the same as what I was looking at, and where their projections are for the future and how you can use that right now to make yourself the money that we were talking about earlier. So before we jump into that, let's just check out a few more charts, because I like charts. So here we have the mining difficulty chart. This is the one that we saw earlier, and this is a historical chart going all the way back to the beginning of Bitcoin up into today, and this is showing how difficult it is to mine Bitcoin. So I don't really want to get into how this is because it's going to be a bit too long to go into, but if you do understand mining difficulty and hash rate, then that's cool. You can clearly see that the difficulty for mining a Bitcoin dropped off. This was because of all the hundreds of thousands of Bitcoin miners which were shutting down during that period. However, you'll note that towards the end of last year, this is January 2019, this line here, so back in December, towards the end of the year, we were at a bottom. And then we just started coming up now, and the miners are all beginning to switch back on, and the difficulty is rising. Now, if we take a look at the hash rate, we can see exactly the same story there happening. Towards the end of the year, the hash rate went really low, which means the miners were shutting down. And now we're seeing that that's starting to rise up as well. And what is very interesting to take a look at is, despite the fact that Bitcoin prices have gone down so low, Bitcoin seems to be getting used more than ever. So if we take a look at this chart here, this is sent in USD. So this is Bitcoin actually getting transacted and used in its US dollar value for Bitcoin getting used each day. We can see quite clearly on this chart that we've not been trading this amount of US dollars worth of Bitcoin, not ever in history since early 2017, really, other than that one peak up. We are sending enormous amounts of value through Bitcoin every single day right now. It did go down to a low point towards the end of the year, but since the beginning of 2019, the usage of Bitcoin is going up, and that really shows a sign of strength. And the use case, the underlying use case of Bitcoin getting used as a currency is really strong and growing. So that's great news. Now, for the more exciting part, let's take a look into these charts and how you can use this information now to make some better investment decisions for yourself. I think you could gain massive financial benefit from what you're about to see and learn. So let's jump into that right now and take a look at these three charts. So the first one that we're going to take a look at is by this Chinese guy here, his legendary analysis of the long-term growth of Bitcoin. He is using this big pitchfork, not in the way I would myself. So out of the three, this isn't my favorite, or let's just say it's my least favorite. I do like the way he's written in this takeoff, bear trap, first sell, bear trap, media attention, and all that jazz. I think that's pretty in-depth and pretty clear to most people what that means. He, like myself, has also outlined this descending triangle here, and the fact that it would be going down round to about the 3,000 mark before popping off back up. So according to his crazy pitchfork thing that he's got going on here, he's predicting that would be about the $140,000 mark for Bitcoin in November 2021. And if you was going to hit the top of the pitchfork, as you see the last two peaks did, that would probably be up here somewhere off the chart. I have no idea what that would actually be. Let's just pull that down. Here we go, around the sort of almost $300,000 mark. So who knows? Are we going to be looking at $300,000 Bitcoin? Let's get into this one. Now, this is really my favorite of the three. Let's just go over what you're actually looking at here. So each of these boxes is the time it's taken from the previous all-time high, go into the low, and then going back up to the previous all-time high. And the blue lines that you see also signifies the point of returning to the all-time high and when the date for that will be. So like you see here, the last time was February 2017, where you popped back up to just over $1,000. And the projected time when we should be going back to the 20,000 that we hit there. So we should be back up to that, according to this, around November 2020. And the green lines here signifying the all-important Bitcoin halving. Alright, so if you're not too clear on what Bitcoin halving is and why that affects the price so much, let me explain. In a nutshell, it's basically the amount of reward that the Bitcoin miner receives for mining all the transactions which are going through on the network. So say the Bitcoin reward was 10 Bitcoins back in 2012. Then when it changed in July 2016, it would have halved from 10 to 5 Bitcoins, which means the miners, obviously, they're getting half the amount. Now, when it changes again in, when is it, May 2020, it will be changing from 5 to 2.5 Bitcoin. And this does two things. One, it means that miners are going to be receiving less reward, which means because of the electricity usage that they need to use up and spend money paying the electric bill, they need that Bitcoin to be worth twice as much. Also, the amount of Bitcoins being put out into the world is going to be less. So in the beginning, up to this halving point here in 2012, I believe there was about, say, 10 million Bitcoins created. And then in this period between 2012 and 2016, there would have been about another 5 million Bitcoins created in that period. And then from 2016 up into 2020, there would have been half the amount, just 2.5 million Bitcoins created in that period there. And going forward, it'll just be halved and halved and halved until the full 21 million Bitcoin have been created way off in the future. So now that you understand how important Bitcoin is and why it's going to increase the price of Bitcoin, let's take a look at what's going on in this chart. Taking a look here, we can see the first Bitcoin halving here in November 2012. And about 1 year earlier was actually the bottom for Bitcoin at that time. And it increased in price from $2.40 all the way up to $12, which, well, it's over 4 times the increase during that period. But then it's the time after the halving. So the lead up to the halving, you're going to see an increase from the 1 year point prior to the halving. You'll see an increase. But after the halving, it will go up dramatically from there. And then it's going to come back down again. And then here is the halving date here in July 2016. But 1 year prior, in July 2015, this is where we was at the bottom of the market. And then the price rose up. And then after the halving, it just went all the way to the top once again. And then here we go. We're at the stage now where it's come down. We're coming up to the 1 year before the halving date. So the next halving is May 2020. 1 year before, May 2019, a point which we're very close to now, just a couple of months away. So that should really be the bottom. And if you're buying anywhere here, anywhere around this sort of 2,800 mark up to the sort of 3,005, anywhere in between there is going to be a great time and a great price to be buying Bitcoin. Because as soon as we hit the 1 year prior, we're most likely, just as we have done before, we're going to start rising back up. And once we go past this, the Bitcoin halving date here in May 2020, it's just going to go all the way up to the top to the new all-time high. Now, according to this, the all-time high is at this red line. This is the estimated date for the all-time high, which is January 2022, which would mean the price at that point would be up at about $400,000. $400,000 for Bitcoin. Now, I think that could just be a little bit too enthusiastic. Possibly. Possibly not. Who knows? It could go that high. But if you take a look here, this is the first rise up. It's quite a steep incline. And the second was a lot less steep. And the guy here that's drawn this one in, I think it's pretty similar to the previous one. Personally, myself, I would draw that in a little bit less steep and maybe bring it up to about here, around the sort of 80 to 90,000, I would imagine is where that will be. And now let's take a look at the third and final chart and see where that guy says we're going. So here we got a completely different looking chart again. This goes on a sort of curvy look. So we've got all the bottoms on this inner curve here, all the bottoms of where the low points have been in Bitcoin over the years. And then this curved line showing all of the high points of Bitcoin. So as we see here, all the tops in a curved line, we can get a better idea, a better projection as to where we could be heading in the future. This guy has exactly the same predictions as I had, as for it coming down to around the sort of 3,000 mark. So, obviously I said 3,200, which has been correct. But all of these three guys all have said around the sort of 3,000 mark, 2,800, 3,000. and it could be by the 30th of September this year. Now, I'm suggesting as we get there through the next few months of this year that we're going to be traveling somewhere between the sort of 6,000 to 3,000, and we're going to be stuck in a channel for the most part of this year, which is going to be a great time for buying up the Bitcoin when it's down around the 3,000 mark. You know, maybe ride it up to 6, cash it in, wait for it to drop back down to around the 3,000 mark, buy it up again, and just try and double up, or at least increase the amount of Bitcoin that you've got. Maybe don't sell it all off at 6,000 just in case it does for some reason raise up even further, but just do it in small amounts, you know, just small little trades, and try and buy yourself some Bitcoin throughout the year, because this is really the bottom. As you've seen, both my prediction and these three guys here on their technical analysis charts, you can see that we're all in agreement that around this 3,000 mark is definitely going to be the bottom for Bitcoin. I say definitely, obviously nothing is definite in this, but as definite as you can be for sure. Looking at the squares that this guy has already previous put out, which do seem to be getting wider on their route to the all-time high, it looks around about here. So this is January 2022, which is the same as what the last chart showed to be the all-time high. So if that is about right, January 2022, looking at that curved line there at the top, we can kind of estimate how much we're going to be looking at earning from the Bitcoin at that point, which I would imagine by January 2022 is going to be around that sort of $86,461. So somewhere in that $80,000 to $90,000 range is where I would put Bitcoin, both for this chart, looking at that, and also this chart. Like I say, I think his projection line going up is a little bit too steep for where we are in the market. I would imagine that's going to be more like this, coming up around the sort of 80 to 90 mark. So there we go, guys. That is 4 predictions by 4 different technical analysis type people. I don't think any of us do this for a living, but we all do seem to be in agreement as far as this is concerned. And you know, if you've got money sat around in the bank doing absolutely nothing, I'm not saying to go out and get debts to buy Bitcoin right now, although to be fair, that's not particularly going to be a bad idea. But if you do have money just sat in the bank, like $10,000, $20,000 or something, then you might want to consider putting some of that into Bitcoin for the future, because well, it's looking a pretty good deal for sure. Just one teeny weeny little thing just before I go for this Friday is Satoshi's Mine. So a lot of you guys have been waiting for Satoshi's Mines to come out. We are just 1 week away from launch, and what it is basically a way that you can invest in masternodes without requiring the full amount for a masternode. So if you wanted to buy something like Dash, up here on the periodic table of cryptocurrencies, pretty stable coin just like Bitcoin that you could invest in. However, to buy a Dash node, it's going to cost you about 80 grand. And why you're going to want to buy that Dash node is, rather than buying something and investing in something like Bitcoin, which just kind of sits there in an account and you hope that it goes up in price, which it probably will for sure over time, but while it's sat in your Bitcoin wallet, it doesn't actually like earn you an income. Like if you would put like $80,000 into a house or into some stocks and shares, you're going to earn some sort of return on investment each month and earn some sort of salary. Well, not a salary, but you'd get some profits every month that you can use to like pay the bills or pay for like a lease on a car and just get by in life. And that's what you need. You need cash flow every single month. Now, the difference with a coin like Dash being a masternode coin is you can buy a masternode to support the network. So rather than mining and having to tune through all the electricity and fight off other miners to try and win those Bitcoins, how it works is slightly different with masternodes. All the masternode owners do get a return on their investment and do get to participate in making the transactions happen, and they happen a lot faster than the 7 transactions a second with Bitcoin. It also requires quite a hefty stake of cash to be putting into that masternode, and that's where the security is. Not everybody has $80,000 lying around to set up a Dash masternode, and there's also lots of other expensive ones like PivX and Zcash and Zcash, Zcoin. So there's lots of different masternodes you can get, and they all get a really great return. So you're talking somewhere between about, you know, sort of 20 to 100% on your investment, which is your earnings for the year, which is a lot better than investing in housing or the stock market or anything of that nature. So that's why I particularly am very much interested in masternodes, because I can invest my cash into coins rather than Bitcoin, which not only am I going to earn money through just holding the coins, which you've got there on the masternode over the years, just like you would if you had Bitcoin sat in a wallet, like we've just looked at, but you'd also be earning a monthly residual income as well from that, which you can live on, which is great, right? So that's why we've made Satoshi's Mines. That's why we've got this really good algorithm to filter out all of the terrible masternode coins which there are, and just have the nice, safe, secure ones which we can invest in long term and just make profits on month after month. And right now behind me, you can see 3 of those coins which we've added to Satoshi's Mines right now. And as I say, it is still in development, but this time next week, Friday next week, we're going to be doing a video just like this one, where we're going to be launching Satoshi's Mines, and you'll be able to actually invest in those masternodes for the first time. And some of these masternodes are very, very big. You may not have the cash to invest fully in it yourself, but because of the way we've set up Satoshi's Mines, it's kind of like crowd-funded masternodes, if you like. So you can invest, you know, whatever you've got to invest, and say you'd like to invest in this masternode, that one, and that one, and we just split up your money and invest your funds into these different masternodes and earn you a residual income every single month from your masternodes. So that's cool. That's coming this time next week, Friday next week. Make sure you don't miss that. And I hope you like it, guys. If you do like it, leave a little thumbs up there below. And if you don't like it, if you think this is terrible, just dislike it. I don't care. I don't care. Just dislike it. Go in the comments, write whatever you like in there. That'd be cool too. If you want to catch up and chat, ask any questions, just head over to the Telegram group. All you need to do is head over to moocharoo.ninja. There'll be a link for that down below. And you can scroll all the way to the bottom where we've got all the links for all our social media channels. And the best one to catch me on and everybody else in the community, particularly the Master Ninjas, is the Telegram group. And that's it. Simple as that. Now you can have a look at some footage as we roll out from where I went to the beach to try and film some of this, and it all went a bit wrong because we had no audio for some reason. Something messed up on the mic. We had no audio, but never mind. Try again next week.
Can you be cold-hearted when you get